Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo Nightly Video for the 10th of January here in the new year of 2024. We have a couple things to note in today's plan for the rest of the week, and that's going to be, here we are on Wednesday evening for our TheoTRADE in video night, or nighttime video. Tomorrow is going to be the US CPI, that's our Consumer Price Index, and some inflation data. That could be a big market mover. Our expected moves are a little bit elevated for the next trading session. We'll go over that. Not much on the docket for earnings until we get to Friday. Friday is going to kick off outside of PPI. PPI is your Producer Price Index. We'll kick off JP Morgan, Bank of America, Citigroup, Wells Fargo, BlackRock, and Bank of New York Mellon, including Delta Airlines and UNH and some others that are in the mix. But that'll be on the docket for the next trading session, and it will be very likely to create some volatility. Let's start with the volatility. Going forward, for the Nasdaq, we've had an elevated expected move. Again, we're looking for that CPI data to come out tomorrow. There's been little reports that it could be a little dovish. Dovish just means a weaker number than expected. And if that happens, that could be a catalyst for a market rally. Could see the Nasdaq up about 148 handles, roughly speaking. S&P about 36, looking at the more proper SPX. That'll be about 32 or so handles in tomorrow's session. And let's get right to that. So on the calendar, we'll look at the calendar here on the Market Watch. Go to calendar, CPI, you see it. It is on the docket. Now, what's the number? What's the headline? What are we looking for in tomorrow's pre-market activity? That's West Coast time. Looking for a CPI month over month of about 0.2% growth. So that's Consumer Price Index, change in the average price level of a basket of goods and the like. So we'll look at the data as it comes in, and we'll see the year over year change could be a little higher, could be 3.2. And the Fed wants that number. Lots of ways to measure inflation, but that number needs to be, in the Fed's idea, a little closer to 2%. We are getting there. The trajectory is down. Inflation is coming down. Oil prices, now the commodities are coming down, but are they coming down fast enough? And of course, we'll take a look at without food and energy. And this is the one that always gets me. Do we assume people don't eat and they don't travel, they don't drive to work or take transportation or in some way use energy or food? And of course, those are volatile. Those could be expected around 3.8% or 4 or so. And those, again, are the headline numbers. Any big deviation, if it's larger than expected, which is a bigger number on all these expected numbers, that could be a bearish outcome that could send the equity market much, much lower. And of course, if these numbers are a little lower or not quite as high as expected, that could be a bullish catalyst or a bullish surprise. It all does have to do with what inflation is. That's the talk of the town and the trade, and what that means about the Federal Reserve. We're expecting, the market, that is expecting rate cuts from the Fed in 2024, numerous rate cuts. And outside of that, we thought we were finished. But CPI will be a big driver of tomorrow's pre-market and maybe the entire trading session. Again, not a lot on the earnings standpoint, but we are going to have a slew of financial stocks here in the S&P 100. We'll just take a look at some of those just quickly on the names. Actually, we'll do this to get a little clearer. Let's get that, make it larger. What I have here is the days until expiration. I'm going to sort by that. Lots of ways to find this, but BlackRock, Bank of New York Mellon, Wells Fargo, Citigroup, JP Morgan, Bank of America, Goldman Sachs is going to happen on Friday, or coming up on the next trading session next week. So there will be additional earnings, additional financial companies. But when it says 2, that means not Thursday. Thursday's 1, pre-market. 2 means Friday, at least from us on Wednesday. And those could be big market movers. Let's take a look at the financials. They are back at the highs. And the key mover in today's session was not necessarily financials. Let's, while we're at the sector level, take a larger view of this. And just to show you, F is financial, K technology, Y discretionary. These are the offensive or the bullish type sectors. You're going to see stocks will go here. such as the leaders. They generally were technology stocks, but right there with Amazon, Lowe's, and Home Depot were gainers in today's session. I talked a lot about technology stocks. Many people did as well. I didn't mention anything at all. I don't think I did, at least about Home Depot or Lowe's in today's session. But they were up there with the leaders in technology. Technology meaning Meta and Nvidia, Microsoft, and the others, which does include some other stocks like Google. And we'll come back to that in a minute because those stocks made 52-week highs. But we had a split today. Today was a split trading session. The Russell, which is your broader small caps, flat on today's session. Dow was a little bit up, but it was down to the Nasdaq and the leadership right here. You see them in Meta and in Nvidia, both of which made 52-week highs in today's session. In fact, how many stocks made 52-week highs with those stocks and in general with the bullishness in the sector or the limited portion of the market, not the whole market? That's going to be Google, Nvidia, Meta, throw in Eli Lilly, healthcare stock, Visa, a financial, MasterCard. They go together. There's Home Depot. It made a 52-week high in today's session, gaining about 3%. Costco, GE, and all the way down the list. Now, these stocks are strong, getting stronger. These stocks do have, at least in terms of analyst reports, going back over here to the fundamentals, if it loads, a big bullish or accumulation buy, long, or 4 out of 5 stars. That's going to be similar in other leading tech names, and that's a strong basis for additional rallies. And again, you can always take a look inside of the financials, what the 5-year trend, what the earnings, sales per share, cash flow, all the things in the fundamentals tab here under the analyze in thinkorswim. But the chart is bullish. The chart remains higher highs and higher lows and a prevailing or persistent, continual uptrend. And I use the term relative strength. Relative strength means these stocks are outperforming above performance of the market, and those are getting stronger, and that is leading or continuing this technology, or I like to call it AI, artificial intelligence, the hoopla and the hype and the hope, somewhat similar on a very smaller scale, but similar to how the markets behaved in the run-up 1999 into that tech bubble in the Nasdaq. Irrational exuberance is what Greenspan called it, but nonetheless, that is what the stocks did, and they do continue, as we see the Visualize tab, to have an outsized influence on the Nasdaq. These 6 stocks, Magnificent 7, Magnificent 6, numbers don't matter. It's Microsoft, Nvidia, Apple, Amazon, Meta, Google, maybe a little bit of Tesla, maybe some Broadcom and other stocks like it. But those are the leaders in the market, and that is pulling up or back, rallying the XLK technology sector, and why discretionary. Outside of those, we still continue to have what I've been discussing as the broader narrative. And the broader narrative, I think, is best seen through our sectors. What does that mean? It means the broader economy should not be seen as a bull market. It is not a bull market. There are too many conditions of economic weakness, and we have unemployment still a little bit too high. Of course, inflation is still running. It is coming down, but it is still running a little higher. And of course, consumer confidence and the like. And inflation. Inflation's higher, as are interest rates. But it's not a bear market. Cannot be considered a bear market. Cannot be considered at this point a recession. It is better seen as a sideways or a perhaps stumbling, but a recovering type of economy with sideways type action. That's going to be seen in terms of trades in our ETFs. And the ETFs, I think, tell the bigger picture of where the market is and where the economy is. Not a bull. If you're looking at the technology sector and you're declaring all is well with the bull market, that's not the bigger picture. And here in discretionary, it's largely stocks such as Amazon in the consumer discretionary, also Home Depot and some others. This is a wide sector, the retail sector, but it is dominated by stocks like Amazon. Over here is stocks like Apple and Microsoft and Nvidia and the others. But this is not the U.S. economy. it's only one very small section or sector of the economy, I still think, and I still will be trading with this logic, that mean reversion or sideways, to me, putting short sell positions from above and trading back to the middle of a distribution like a range. So that's the summary in quick video version, that we have better descriptions or better trade logic of shorting from overhead resistance, going long from underhead support or under level support, and not expecting bullish conditions like we saw in 2021 or bearish conditions like we saw in 2022. It is and the word I use is muddling through. The economy and the markets are muddling through. And if we look at the S&P, that would be hard to distinguish, and especially in the Nasdaq. But again, that's not the broader picture. The broader picture to me, and how I like to explain it and do trades in it short term, is the Russell. And even looking at the weekly perspective, this, I think, is a better way to explain or to conceptualize where trades are taking place, where opportunities are, and they are on both sides of the market. Overhead resistance does provide short or bear or put type of opportunities in multiple sectors, and of course the ETFs themselves. But however, because we're not a bear market, we have long or bullish opportunities on the support level bounces. So to me, this is a range. This is a continuation of a long-term trading range, neither bull, neither bear. We are going to get more data, and the data will be our CPI and how the market reacts to that inflation data, what it says about the Federal Reserve. Inflation rising, falling, or staying about in line with expectation. And then once we're finished with that, traders, we're going to be looking and trading and positioning or hedging into some key financial stock names and the ETF itself, which should not be surprising to be on the short of the bear side at the top of a longer term trading range. Lot to go through this week. Lots of volatility still packed in the market, and we'll be trading and following alongside of these moves. As always, be careful and safe. This is Corey Rosenblum with tonight's Theo video update for January 10th, 2024.